Welcome to another episode of RIA Collective. I'm your host, as always, Charlie Van Derven. And those of you who are regular listeners, you know that we're made a little transition, right? All of our early interviews, Damian, I think we're on maybe 60 or 65. It's crazy that we got to that number. All of our early interviews were really about the transition, right? And RIAs that came from the wirehouse or big insurance companies and have made that transition to independence and what their experience was like and what they did well and maybe what they didn't do so well, so that there was some learning mechanism there. And more recently, I really want to introduce you to my connections in the industry that are making a huge difference for the RIAs that we service in common and the ones they service outside of our mutual relationships. And today I'm joined by Damian Lo Basso. Damian's freaking awesome. And if you're watching this on YouTube or LinkedIn video, if you're on audio, too bad you can't experience it. But if you're on video, you can see that we wear the same uniform. Damian, you grow a mustache in 4 days, dude. It's crazy. Uh,
The Italian genes are strong, Charlie.
it took me 53 years to realize I could even do it, Damian. But yeah. Anyway, Damian's business is My RIA CFO. And there's positions in this industry, Damian, that someone can basically hang a shingle. And because they say they're an expert, they're an expert. Dude, you have the track record to prove it. So Damian's a CFO, a fractional CFO for RIAs. But I want to let him do a little introduction himself because where he comes from is all the credibility probably that you need to hear. Damon, I got the utmost respect for the work that you do. We've got a few mutual clients, so I get to know that work a little bit more intimately. Dude, introduce yourself.
Charlie, I appreciate it. And I appreciate you giving me the opportunity to have a good conversation with you today.
Yeah.
Yeah, so as you stated, I'm the CEO and founder of My RIA CFO. And just to give the audience a little bit of color as to my background, started off as an investment banker where I specialized in M&A for several years before transitioning to my first foray into the wealth management industry, which has become, if you would have asked me 15 years ago if I would be living in this world, that would have been a surprise to me as well. But I took over as the vice president of Dynasty Financial Partners, where I led all their financial operations, internal reporting, all client aspects of their financial workflows, systems, operations, reporting, before conceptualizing this concept of an outsourced CFO at Dynasty, where we launched the Dynasty OCFO program to tremendous fanfare. One thing led to another, and it really became clear that the industry at large this was a gap in the industry at large, and not just the network within Dynasty. And so back in 2016, 2017, I launched my first OCFO firm, Compass, with my partner Matt, who is wonderful and still runs the business today. And it was, I was surprised at how well received the industry accepted us. And we grew very quickly. And when the time to make a decision came, I divested my interest in that because I had an offer to become the internal CFO and founder of a $5 billion RIA in New Jersey journey. And that was an incredible experience, both getting it off the ground, the team aspect, growing it to where it was. And then as life comes full circle, my very first client at Compass, Apollon Wealth, the CEO, Mike Over, gave me a call and said, listen, we are at an apex of our own sort of growth. They were at the $8 to $10 billion mark, and he said, we need you. And it was the right time at where Journey was. They've since sold. That I made the decision to become the internal CFO of Apollon, which when I joined was around 10 billion, and now hovering somewhere in the vicinity of 20 to 30 billion, right? So we made tremendous strides, both in terms of M&A activity, in creating internal efficiencies, so on and so forth. And then this past October, the calling came back, and I ultimately decided to launch My RIA CFO. And this is essentially a more white glove version of Compass in some ways, right? Both in terms of the clients we're working with, the service offering that we provide, and maybe I'll just take a second to give some context as to that, right?
Yeah.
Like all fractionals, we have our specialties. Mine is on the financial operations of RIAs, which when you think about the fractional silos, there's compliance, there's obviously marketing and business development like yours. In some instances, there's operations, so on and so forth. But the finance side is one that in many ways is an afterthought, or many firms think, I'm not big enough to need this until they do, right? And so it's not a one size fits all in terms of our service offering. And we offer everything from financial reporting, customized management reports, book closings on a monthly basis, through a lot of the operational aspects. So bill pay, payroll, expense management, and then in the instances where it makes sense, where clients have a need, we can then delve much deeper into the strategic side of the business, which is the fun stuff, right? All the forecasting, financial modeling. In the instance where firms are interested in the hottest market in the world, RIA M&A market, we can help evaluate those opportunities both from a buy and sell side. And really, it's to be the partner alongside the founders of the firm, right? To say, listen, here's the numbers, because a lot of firms, and I know we'll talk about it in a second, here's the numbers, but what do they mean? What's the story they're telling? What do we do with this information? Because most advisors are seeing, oh, look, there's money in the bank, I'm profitable, all is well, right? Until it comes time to make a significant decision. It could be on the employment side. It can be in terms of having to implement new technology. And then they don't realize, what does this mean in terms of longer term growth? What does this mean about my ability to make decisions at some time in the short term and the midterm down the line? And we're really here to arm them with that information and then give them the tools and empower them to now use that information to make the decisions that are going to set them up for long-term success.
Yeah, you play such a key role, Damian, and then also the transitions you've been able to see over your career. And I didn't know my RIA CFO just launched in October. So awesome.
It's been close to the best. We've worked with RIA, and I've personally worked with RIAs for years, but the more formal launch was in October, where we really brought this offering to market. And again, I'm always so humbled by the reception that we received, but it's not surprising considering we're fortunate enough to be in an industry, and I always relate it back to baseball, that I still think that we're in the bottom of the second or top of the third, and where the maturation of this cycle is. This is not the airline of the automotive industry where it's a fully mature industry and breaking into it is going to be very tough. This is an industry where I think people are only now starting to realize the significance, the power of it. You're starting to see Saudi money pouring into this industry, international money. All the big institutional investors in the US are dying to get in some capacity. Everyone wants a piece of the wealth management industry in some capacity, because now they're only sitting down and realizing this is the future. This is where the advisors are going to move to. This just makes sense. The autonomy, the ability to act in a truly fiduciary responsibility to their clients and not be stuck with the constraints of a wirehouse. It's fine. It's always been there. It's been around for decades. I think that it really just caught on in a way in the early 2010s, but now it's hot.
Yeah, it is very hot. In fact, if we look back at, and I reference this all the time, so I'll try to say it differently because I say it the same way all the time. If we look back at trust issues within the industry, I point to a Gallup poll that I looked at that had advisors ranked fourth worst trusted, least trusted in the US. Do they still call them stockbrokers, right? So the industry's been fighting so hard, even name changes of the positions, where it's the whole reason we launched the podcast. There's such a significant ding against this industry, and every advisor I've ever worked with is doing something pure for people. It's part of why I gravitated towards working with RIAs more than the career was started with websites for wirehouse advisors. And it's where the industry's going, but I don't think the public has picked up on it yet. I still think the public thinks it's Wall Street.
I agree. And you hear it all the time. I think you use the phrase perfectly. When I speak to an individual and they're like, oh, I called my broker. And I say, are they your broker or are they your advisor? Are you paying them every time they make a trade? Or are you paying them a fixed fee and they're creating financial plans for you? They're helping you with your estate planning. That's your advisor, right? And there's still you said it perfectly, this misconception over what their role is, how they operate, are they operating in your best interest or just for a commission? And in that case, it could be a conflict. But I really like where the industry is going, where the conversations are taking place, right? Because it started with it's better for clients to move from commission-based pricing to a fixed fee, right? And now it's going to, should we be charging on a percentage of assets or just a flat fee, which makes us completely independent of market movements, right? Should I really be getting paid more if the market goes up 20%? Or subsequently, should I be getting paid less if the market goes down 20% as opposed to just a flat fee for the year, right? I like that those conversations are taking place because the foundation is the same. It's just now we're just kind of getting into the technicality of it, and I think the intentions are right.
Yeah, I saw the announcement this week of Agenic and JP. So I don't even know what that looks like yet, but they're rolling out agents inside of JP Morgan, which brings hyper focus on the relationship, right? So if JP Morgan is doing that, the other wirehouses are not long to follow, right? So they're trend setting on that. And the advisor really is there for relationship at this point, right? Certainly advice and certainly trust in that advice. But when your portfolios are being run by AI instead of a team of portfolio managers now, I think it's going to create greater divide between that Wall Street and the RIAs. So it's
Correct. I agree with you. I
I
agree
think
with you. We saw it with Wells Fargo, right, where they created their independent channel within the wirehouse because they
yeah,
were trying to get ahead of this.
yeah,
Whether it's independent or not is up for debate. But
sure.
I think that there's consensus. It's just getting the advisors that are still at the wirehouses comfortable enough to know that this, while there's always risk, right? And I'll tell my clients from day one, this is not you. There's work to be done. But the upside and the way that you'll be able to service your clients on the other side is just completely night and day. And with the right planning, with the right partners, and they don't have to be internal, right? They can be fractional, which is why we're here.
Yeah.
There's a whole world out there waiting to support you. You just need to take the time to educate yourself and to make sure you have the right pieces in place.
Yeah, agreed. And Damian, this is a great time to plug our webinar. Hopefully we can get this out before the webinar goes. But May 27th, Damian and I, fractional CMO here, fractional CFO with Damian, fractional Chief Operating Officer, many Jen Goldman, and then Eric Stein, fractional Chief Investment Officer. We got a webinar coming up on the 27th talking about the benefits of outsourcing, how the fractional role really plays that benefit the RIA without the huge investment. I think, Damian, we were on a prep call for that. We looked at the four of us and we went, this is like 1.2 to 1.5 million dollar in salary if you hire us all directly, where
Correct.
a fraction of that to be able to bring that into your. So the beauty of that is someone can leave a wirehouse or large insurance. They've come out of a sales role. Now they have to run a business. They don't have to make the astronomical investments in services like yours and services like mine, Jen and Eric's, and there's others out there as well. So I'm excited about that conversation, dude. I'm the 27th, I think, at 1 o'clock, if I'm not mistaken.
Yeah, I think you really, I give you so much credit, Charlie. You put together such an amazing group. Eric and Jen are the best at what they do alongside you, right?
Yeah.
And I think that what people are going to learn is really going to give them maybe a newfound confidence that they didn't already have. And the thing that I'm excited to convey is that even if you have any one of these pieces in-house, right? If you have an investment officer, if you have a financial officer, if you have a chief marketing officer, any one of our roles is built to support that person as well. We can act as in the full Monty if you're in that position, but I think what's the best part of it is that if you grow to a point where you say, I want an internal chief marketing officer,
Yeah.
we're still here and they find so much leverage and support and still utilizing us to support them. Now you don't need an associate in a role to support them. Now you don't need a controller to support your financial officer. The relationship is meant to grow regardless of where the firm is in their own life cycle, which I think is exciting in and of itself because we're built to grow alongside the firms.
Yeah. 100%. I want to talk. I see so many advisors like trying to cheap the transition, if you will, right? So, of course, there's a lag in pay, right? Because all those assets need to move over and be billable. And so they've got to get into it efficiently. Not everybody's got super deep pockets when they make this move, Damien. So I see a lot of people investing in, from our perspective, it's maybe just, I want to say buying leads and canned content and all this easy stuff to put in place. It doesn't necessarily move the needle from a marketing perspective. But from your perspective, I know a lot of bookkeepers. If an advisor's invested in a bookkeeper just to make that transition, keep the cost low, when does it make sense for them to engage somebody on a higher level? You kind of said it earlier, right? When it's not just reporting, it's about making the right decisions based on the finances of the firm. So if you want to elaborate on that a little bit.
Absolutely. And candidly, and it might sound self-serving, but I think it's always right. And it goes back to each stage of an advisor's transition to independence has its own set of important needs, right? And they really begin on day zero. Advisors are so focused, rightly, on transitioning their book of business, making sure they're meeting all their compliance requirements, that they're not thinking, what am I forgetting? Having to deal with the independent state tax authorities if you have W-2 employees and the filings, and making sure that you're maintaining proper books and records, because now the SEC kind of changed its audit requirements where they're really looking to audit you with the first 10 months. That's a change that happened during COVID. basically the SEC's thinking is it's much easier to audit a firm within the first 10 months of it, so we can hit more of them and really, I don't want to put fear out there, but scare them into knowing that we're there, as opposed to them being in operations for 10 years. Now we show up and there's so much more that could have gone wrong for so long, right? And it can't be, and maybe sometimes it's not malicious, right? It could just be they didn't know one of the requirements. It could be a reporting requirement, or they made a claim on their website that they don't know, which you would catch. But anyway, it's more of just getting it early. And now these advisors are spending hours and hours on things that are not generating revenue, are not servicing their clients, are not building their pipeline of new clients. And furthermore, they're not putting pieces in place to really just gain proper footing. So when I think about it, there's pre-transition need, right? Let's put a budget in place. What is this transition going to cost? What systems do you need? I've done, dating back to my time at Dynasty, well over 200 transitions in the wirehouse, and then certainly maybe even half of that M&A transactions, right? So knowing the gaps is the specialty of ours, and making sure that we're able to fill those gaps. How are you coordinating with the custodian? Are you taking full advantage of any transition support funds that are being offered to you? Who negotiated that? Do you need help in negotiating to make sure that you're getting the maximum amount of value from the custodian, right? Those are the pieces that who's coordinating with your compliance officer to making sure that the financial reporting requirements are matching the compliance needs, right? And is that where you want to be spending your time? And it's funny, Charlie, the first thing, it's consistent, but in so many cases, the first thing I hear is, oh, don't worry, my wife's a CPA or my husband's a CPA and he does the books once every couple months. Or I have a cousin that does it when they get around to it. And it becomes clear that potentially free benefit is not really free when you look at what's being missed, because the proper amount of attention is not going into it, right? And that applies to firms that have 20 million in assets to firms that have multiple billions, because our clients range the gamut. We're able to customize our service offering for every size firm, and it's because every size firm has a core need, and then we can tack on as those needs grow, right? In some instances, it doesn't make sense to pay someone to cut checks for you if you only have 3 checks a month, right? Or if you have no W-2 employees on staff, obviously you're not going to pay someone for payroll. So that's why it's so important to be able to listen to the advisor, really understand their needs, and then you can say, listen, here's what you need. The other stuff is there waiting for you when the time comes. But for now, let's just focus on that. And now they have a sense of comfort that, okay, I'm not paying for things, and I'm not overextending myself for benefits that I don't have a need for now. But I know when the time comes, I'll be ready for it. We will have talked about it many times prior, and it's a simple tack on to the service offering. So I think in short, to answer your question, it makes sense always, because a bookkeeper is going to just take your numbers, put them into QuickBooks, and then hand you your financials.
Yeah.
You need to make sure that they're being done correctly and in a way that is required for the SEC, because you attest that one of the fiduciary requirements is you're maintaining proper books and records. So just even in that case, that's step one. You have to make sure that they're being done correctly and in the way the SEC and the IRS wants it. And then step two, it's what are we doing with these numbers now? Because in many cases, they just wind up in the drawer in the advisor's desk and no action's taken, nothing's flagged, nothing is really not drilled into. And then that's where you start to uncover really what are the actions that need to be taken now moving forward.
Yeah. Your experience is amazing. 200 transactions, right? 200 M&A transitions, I should say. You also commented on, hey, my wife's a CPA. Damian, we run into stuff all the time you wouldn't believe. Hey, my cousin's going to build me a website, but doesn't understand disclosures. I spoke with a client who is working with a YouTube expert who is not industry native, and they're building a landing page for their YouTube funnel. And we're just going to put client testimonials on there and case studies. And I'm like, okay, but I'm here to help, right? Pump the brakes a little bit. So do you know the SEC marketing rules around testimonials and reviews? And so there's just subtleties within the industry and within the regulatory bodies within the industry that someone outside the industry isn't even going to know to think about, which potentially creates big issues when that audit comes down the road.
Correct.
I kind of dig that they audit it within the first year. Yes, they want to make their presence felt, but also I think if they catch it early, it's so easy to correct. So I think there's some of that, hey, flex and muscle, but I also think it's probably extremely beneficial for this new independent advisor that maybe doesn't know all the subtleties coming from a place where their focus was clients and growth, and now they've got a whole business to run.
100%. And to your point, what in my experience, because again, having the benefit of working with these advisors on day zero, I'm actively part of those audits, right? And I will say the SEC is thorough, but they're not coming in with this intent to destroy, right? They're coming in with this intent to fix. And as long as you can, to their recommendations, or if there are mistakes, or if you have an inappropriate, if anything's done incorrectly, as long as you fix it, then they give you a cure period, right? They'll usually give you 30 days from the time it's identified. Then you're fine, right? And I always comfort my clients by saying they're not there looking to get you. There are bad actors out there that they are going to catch, and they can only hide for so long. But as long as you're actively trying to do the right thing for the firm, for your clients, you will be okay. And there's a lot of peace of mind there to know that Big Brother is watching. And as long as you have the right team around you to get out ahead of it, you're even better positioned, right? Because now when they come knocking, it's when they come knocking, you can say, here's everything I know you need. I know it's being done correctly because the individuals that are doing it for me only live in this world. And then now you get that stamp, and you don't have to worry about them for 5 to 10 years, right?
Yeah.
Assuming that nothing happens in the interim. And that's where I go back to the cost of not using someone, because sure, you might be saving X amount per month, but in the event that you haven't been doing something correctly, or you haven't thought through something the right way, that cost on the back end might exceed the cost of that partner exponentially.
Yeah, 100%. Man, what a great resource you are.
No, it's you. Having had the benefit of meet you through our mutual friend in Massachusetts, and then having the benefit of work with you on some other clients, it just further highlights how one or two really good partners just outweighs an entire internal team of very good people, but without that technical knowledge or that industry knowledge, it takes a while, right, to get there, if ever. And advisors, I know that advisors by nature, just their focus is on their client, as it should be. And worrying about bookkeeping or worrying about digital marketing is not the best use of their time. They know it, we know it, and certainly their support team knows it, but it always winds up, in many cases, it winds up in the wrong hands. And now everyone's scrambling to do the best they can, certainly. But, everyone has a role, and certainly the role that we play, that Jen plays, that Eric plays, and others out there, it's just a very, from a numbers perspective, because that's where I live, it's just such an efficient use, and should be looked at as a reinvestment back into the firm, right? I'm reinvesting in making my firm as institutional as I can without having to blow past my comfort level in terms of hiring someone internally. I get essentially the same benefit at sometimes less than 10% of the cost per year. And that's why advisors of all sizes should be exploring the benefits and the resources that are out there, because just this space is growing on a daily basis, so are the resources available to them.
Yeah, for sure. So I'll plug it one more time. May 27th, 1 o'clock, me, Damian, Jen, and Eric. That's going to be a good one. We'll get the communication rolling on that soon. Damian's website is myriacfo.com. An incredible resource. If you're in that place 6 months prior to making a transition, you listen to this, reach out to Damian now before making that transition, so you can set yourself up correctly and you're not scrambling on the back end of it. Damian, other than the website, anything else you want to plug? Best ways to get in touch with you?
Best way is always just shoot me an email, honestly. D. Lo Basso, DLOBASSO at myriacfo.com. And to Charlie's point, the second the thought of potentially transitioning enters your mind, doesn't matter if it could just be a passing thought. Let's have a conversation, right? Because a good internal CFO in many ways is the connector. And a good internal CFO is not just living in the finance world. They're living in operations. They're living in marketing. They're living in business development. And to be able to have a resource say, listen, you need to be talking to Charlie. You need to be talking to Eric, right? Let's start putting these pieces in place now so that you really have a full scope as to what this is going to look like. And then if you are an established RIA, let's have a conversation to see, listen, if you're not comfortable with your books, if you're not comfortable with, you don't really have a good sense as to the numbers, right? You know what came in, you know what went out, but that's a very simplified picture of what really is happening. That's probably a good time to say, let's look to professionalize this aspect of the business the same way that we're professionalizing the others areas, so that at least now we're armed with the information to go out and take this thing to the next level.
Yeah, very cool. Yeah, visibility before you make that transition is so key.
100%.
All right, so check out myriacfo.com. Damian, you're an incredible resource. Glad to call you a friend. Excited about the work we get to do together. And so for anybody who tuned in today, you can get in touch with me, LinkedIn, social-advisors.com, Damian, myriacfo.com. And I think, Damian, what the kids say, like this and share it and tell your friends about it and
Yeah,
create some
if you're into
visibility,
mustaches,
man.
check out this on YouTube. Yeah, check us out on YouTube if you want to see two cool mustaches. But no, Charlie, yeah, I'm so appreciative once again of you giving me the opportunity, and I'm excited to talk to the advisors out there that are just really exploring the options of this growing fractional space.
Yeah, my gosh, dude. And also, I look forward to that invite to the webinar on May 27th, 1 o'clock.
Yeah, it's going to be incredible.
It's going to be incredible.
Jennifer and Eric are amazing.
They are. They really are. We're bringing an all-star crew to this one.
I appreciate you, Charlie.
All right. Cheers, Damian. I appreciate you being here. Thanks for taking some time, RIA Collective.
Thank you so much.
You and I'll be spending more time together in a few weeks, man.
Looking forward to it, Charlie. Thank you.